Today's session is brought to you by Emerald Financial Group. Emerald exists to help investors make informed decisions about their investments. We offer a range of services to help educate, support, and motivate everyday people to get involved in the stock market. We offer services for any experience level, so just look for the link down below in the description and you'll find a bit more information about us. So today I have Karo Cornips here with me. We're going to talk about trading the Australian market. Karo is a derivatives advisor and the head trainer here at Trader Circle. Trader Circle, as the name suggests, focuses more on the trading side of the stock market, with trades generally lasting a day or two, maybe up to a few months. So look, Karo, tell us a little bit about how trading's been going for you recently, for obviously you and the clients.
So it's been an interesting 3 months, I'd say. Yeah. The market certainly has gone sideways. I think that's probably the best way to describe it, without using more vigorous words. The US markets have been going up. Even recently, they broke into fresh all-time highs. But our market's really kind of failed to push through 6,800. Mm-hmm. So, but that being said, we haven't fallen either, right? So I guess that's the other side of it. We haven't seen a push down beyond 650 for the past few weeks either. So I guess it depends on what time frame you're talking, but ultimately with the type of trades that we're doing, it's mainly focused around options trading, as I know you're aware. Options are very popular in the US, as you guys might be aware, but we also trade them here in Australia, and they don't get as much attention, but we think they should, because during a period like this, they can actually be very useful. One of the ways that we use them is by doing a strategy called an iron condor, right? And it's a funny name, which I don't really know what the origins are, like who knows. It's called an iron condor, and it ultimately makes money when the stock goes sideways, right? Or in this case, it's the index, right? Because we can actually buy and sell and trade options on the XJO, right? Which is the top 200 of our market. So if you can't really do directional strategies, right? You can't buy low, sell high. If really good companies like Fortescue, aren't really doing what they're kind of meant to be doing, or a few other ones out there. I'm sure you guys have your own undervalued stock on the Australian market that you could complain about. If that's not happening, then it's not happening. And at some point, you just kind of get over it and try and trade what you see. And what we've been seeing for the past while is sideways movement. And if you actually have a look at the chart, you'll see that it's really not uncommon for our market. I mean,
not at all.
No. Tim and I have been looking at this market for, I would say, 8 to 10 years now.
Yeah.
And it is not uncommon for us to talk about how the market's going sideways. It dominates a lot of the conversation.
Yeah. I even found myself over the years that, as you start to get to know these types of strategies that Karo is talking about, you start actually looking at the market through a different lens, right? So, as if you've traded before, trading directionally, you got pretty much unlimited upside, don't you, right? The more the market trends, the better. You just keep making money, and over those months, it's a fantastic experience, and you can do very, very well out of it. But then what do you do when the market starts doing this, right? And looking at the chart, as Karo said, you're about to go through, we can go sideways for a long period of time.
Yeah, and so what we'll do is refer to that now. You can see what should be in front of you right now is even before the pandemic, right, when the market crashed in March last year, we had gone sideways arguably for about almost 150 days, right? So it says 146 bars, that's 150 trading days.
Yeah, that's a huge amount of days, isn't it, right? If you really put that into perspective, that's a long time to wait for the market to break out and start trending again.
Yeah. And it can be, I think, if your only strategy for trading is buy low, sell high, which it typically is for people who buy shares, which is probably the majority of the audience watching this video, that can be very frustrating, right? Ultimately, I would say. But because we trade options, we've always got a way to trade the market and consistently be in it. And obviously the goal there would be to try and generate an income stream or turn regular trades over.
But even look after, we had that massive crash last year from end of February onwards. At the bottom there, it recovered pretty quick through, was it April, June? And then you're sideways again for another 155 days, right? So although through April, June, maybe a fair bit of July, that was a fantastic trading period from a directional point of view. So mini warrants, buying stock, CFDs, straight calls or puts, whatever your flavour is. That they're great strategies over those months. But then what are you going to do for another 155 days when the market's just tracking sideways in a tight range, right? So,
I mean, from an investment perspective, it might not make too much of a difference. And, the Australian market's still a great market because we pay out a lot of dividends, right? I mean, we still perform well in the grand scheme of things. We're one of the few countries that pays franking credits as well, by the way. So from an investment perspective, that's all well and good, right? But from a trader's perspective, if you're someone who's actively trading and you've got this kind of bull market, it's great, and then you go sideways for 110 days, it's kind of like, well, all your oxygen's been sucked out. You're just sitting there, like, what do I do with myself? You're looking around.
Yeah.
But if you can trade options and you implement things like iron condors, bull puts, bear calls, that type of thing, then you can still be active and still try to generate that income stream that you're used to generating.
Yeah. So, but obviously, the strategy we're talking about, go Google it, right? Short iron condor. Very popular strategy out there in the options world. Many of you probably haven't heard of it, but go Google it. It'll come up straight away. Short iron condor. It's a limited profit trade, right? So your profit is limited. It's capped, and that's okay because you don't need to pick the direction. You don't care if it goes up a little or down a little, as long as it stays between a support and resistance level. And that's what's so sexy about that type of strategy, right? You can't do that with any other financial instrument in our market.
No. And I think, so a layman's way of putting all that would be, you just pick a market range. Do I think the market's going to stay between this point and this point? When the market's going sideways, that's what it's doing. So you're essentially saying if it stays between this point and this point over this period of time, I make my maximum profit. Your risk is capped as well, by the way. I think that's important to note. When anything we talk about here at Trader Circle, risk is always capped. You can do strategies where they're uncapped, but we don't even want to kind of get to that area.
No, well, we don't even educate people in unlimited risk strategies.
No, not at all, because they're obviously dangerous. So what we'll do is, if it's okay, you're happy to start talking about some of the examples that we've done?
Yeah, let's go through some examples. We've been putting out some recommendations around these strategies of recent. So Karo, run through them.
We've got one example that we've done quite recently, and it's a finished trade. And then after I've gone through this, we'll go through another example that's actually still running at the moment, which if you wanted to, you can try and keep track of. So the one that we're already complete, you can see on your screen, hopefully, that there's an entry point there. That's the day that we entered. Now, the reason we entered the trade, we could probably sit here for another 10 minutes and talk about why we entered the trades. We're not going to go through that. But that's, we tell our clients that. So when we put out this recommendation, there's a whole bit of writing that we do. There's images, charts, there's payoff matrices. There's all this information that we provide our clients so they can fully understand why we're suggesting this trade. But for now, just understand that we thought the market was going to go sideways. I think it's fairly obvious why. And we thought it was going to trade between two particular ranges. We thought it was going to stay between 69.50 and 65.50. And that's roughly the range in purple. And provided it did that until the 11th of March, we're good, right? And the day we entered was the 22nd of February. Okay, so we needed 2 or 3 weeks, roughly speaking, of movement where it didn't go above 69.50 and it didn't go below 65.50, right? Now, instead of talking about credits and debits and stuff like that, which I think can get really kind of confusing, just understand that if it does stay between that range, our maximum profit is achieved. And in this case, it was about, they got in for 16, the risk is 34. It's about 50% profit, roughly, let's say. Roughly around there. Not including your costs, right?
Yeah.
So, and that's exactly what happened. The end of the chart there is the day, is the 11th of March. And you can see the market didn't really go anywhere like we expected it to. And we'll still manage to stay active in the market. We were still able to participate and we're still able to take a good profit.
Yeah.
You got anything to add there, or should I move on to the next?
The only thing I'll say there is what we actually suggested out to the client. You would have received $1,600, which was the max profitability out of the trade, for a 3,300 risk. So your potential profit of 1,600 versus a 3,300 risk. Yeah,
and for the risk to be, it's probably worth mentioning, for you to get clipped on that full 3.3 3,300, you would need the market to explode higher or explode lower or crash. And it'd also be the 11th of March, if that makes sense. And there's other things, by the way, that you can do with options to kind of mitigate your risk, to solve problems, basically.
Yeah. I guess the point of, if you make sort of close to 50% profit, for some of you that might sound like a lot if you're a stock trader or you trade low leverage stuff. For some of you that probably doesn't sound like much if you're already trading high leveraged options and things like that. Just understand that this is not a directional trade, right? You don't have to pick the direction in the short term. You just need to pick a strong support and resistance, and as long as those levels hold, well, you're going to make that 50%, as long as you can make that happen through to the expiry of the option.
Yeah.
So it's kind of a set and almost forget. Like, you keep an eye on it through the day, but it's not like a directional trade that you're watching it like every hour or something. So, it's a different style of trading, and that's perfect for this type of condition of market. Right?
Yeah.
So
and I mean, look, that's a good thing in my opinion. That you need times in the market where you don't actually have to watch it all the time, because there's other things that we need to do in our lives. Even as advisors, there's other things we need to research.
That's it.
All right, well, let's go to the one that we're in now, and again, another example. So we entered this one on the 9th of February. 9th of March.
Yeah.
All right, you can see the giant entry sign there. And this time we actually brought the range up, right? And so you can see the purple range there. That's where we want the market to stay between now and the 25th of March, or between the 9th of March when we entered and the 25th of March, the expiry.
Yeah, so we're talking about expiry of next week for us at the moment. Right? So.
Yeah. And the reason why we put it up higher was because, the US market was breaking into all-time highs. The Dow was doing really well. The S&P 500 is doing really well. The NASDAQ had recovered.
Biden had just signed through all of his stimulus.
Yep, stimulus had come in. Vaccine rollout, economies opening up. All these reasons to be kind of positive, and it was definitely being reflected in not just US markets, but Asian markets as well. And I think it kind of did surprise us that our market didn't really follow suit too much. But again, it doesn't really matter. We just don't want the market to fall too much at this stage, right? So I think we're still good right now. And you're not going to get every trade right, obviously. So we don't know how this one's going to pan out. But considering the market has been grinding sideways to higher, I think this is a trade that's still probably going to turn out well.
Yeah. Well, as we speak now, the market's come off this morning, and we're actually pretty close to that support level. But at the end of the day, we're still feeling pretty confident. Our market's predominantly value stocks anyway, and it's the NASDAQ and the growth space that's leading us down right now. So, we're still very optimistic that we'll pull this trade off. But we're definitely being challenged today, right? So, and that's all part of trading. We'll watch that into next week. If it breaks out, obviously we may make some changes to the trade or close out. But if it bounces from here, we're good.
Yep, and that's why we chose this level. Because as you can see historically, the bottom of the purple range there, if you just go look back, the market likes to use it as a reversal point. And there's a reason why we set these boundaries.
And by the way, guys, if it does break out of our range, we're not going to lose the maximum risk on the trade. This is the big difference between trading and gambling, right? If you go out and gamble black or red, you're going to lose 100% of what you put on the table.
Yeah.
Here we've got 4,100 on the table, right? We could close out right now and probably be break even. We could probably close out Monday if it breaks through our levels and maybe only lose $500-$700, right? So, this is where we've got full control, and we go, okay, well, has our view changed? Yes or no? If yes, okay, we close out. Take whatever losses on the table at that point in time. If our sideways view that we think is going to hang around that sort of 66.50 level, if that hasn't changed, well, then we stay in, right? It's as simple as that. So
yeah, and it means that, and like every trader should have their rules, it just means that decision making is a lot easier. We don't have to do it based on emotion. If work's stressing us out for one particular area, it's maybe not affecting our trading, which is, a lot more common than you might think. And that's what's so important about having rules and applying technical analysis for short-term trading.
Yeah, and when we teach rules through our courses and the rest of it, and these recommendations that you're seeing here, all based on the rules we teach our clients. So everyone's 100% aware of the risks, the rewards, why they're getting in, why they're getting out. The reason why we do the recommendations is just to help our clients save time. Most of them are professionals, work a lot of hours, and just want those ideas thrown at them. So that's what we do.
Exactly. I mean, there's 200 stocks in our market. Someone's going to have to filter them for them, right? I mean, that's what we get paid to do. So, look, if you're interested in learning more about this strategy, Tim said you can do a quick Google. That'll probably inform you. But I think in terms of options trading, if you're a beginner, I don't think either of us would suggest jumping straight into that. It's highly leveraged. We're talking about 50% profits, 25% losses. These are big numbers that, a share investor would not be used to.
And I guess what it comes down to on the internet as well, there's a lot of generic knowledge out there that they'll teach you what the strategy is, but they won't necessarily teach you how to practically apply it to the Australian market. And that's where we differ a lot through our courses. We actually teach people exactly our way, our methods that we've learned over years and years and years of practice on how to apply that strategy and when to our market. Because timing's everything, right? Timing 100% is everything. And as Tim said, if you do want to get educated around options, it's obviously nothing wrong with Googling and reading books, watching videos like this are great, webcasts, podcasts, that type of stuff. But I think at some point you're going to want to have to knuckle down, get some proper education, whether it be through us or another provider, just so that you develop the right habits early, because if you pick up the wrong habits at the start and you keep practicing those habits, it's going to be much harder to break later, and at that point you might have lost so much money that you get discouraged, and I've never seen it actually turn out well, put it that way. Going down self-education for options. Any leverage product, right, needs to be respected, and set of rules need to be applied, risk management needs to be applied. It's not as simple as just grabbing the derivative, go out there and giving it a go. We advise don't do that. Paper trade, get some rules going, get a methodology of trading going behind them. That way you don't become one of those 90% of people. Yeah, the 90%, yeah. All right. Well, that's all I really wanted to cover for today. So thanks for jumping on today, guys. Don't forget, please subscribe. Plenty more videos to come from us. So subscribe to our YouTube channel. You'll get alerts to when we come out with something new. Trying to do that every week at this stage. Also, if you want to know a little bit more about us, there's some links in the description below. Check out Trader Circle if you want to get more into the short-term trading, derivatives, leverage, that sort of stuff. If you're more on the investment side, though, go have a look at Emerald. That's where we do more on the longer-term investment style of engaging with the market. So, thanks a lot, and bye for now. Good luck. Happy trading.